privacy is a superpower. We're heading into a time where we're going to be not so proudly putting the word Bitcoin on our T-shirts or the number plates of our cars and so on, because, as I said, we're heading into dark economic times worldwide. And in those times, people are going to get desperate. And so it's really important now to start thinking about your privacy. And if of the two, having to be on the run, or not be on the run, but look over my shoulder because I might be attacked or range attacked for the rest of my life, or just be completely private so I can walk along the beach in El Salvador free as a bird, I would suggest for most people to choose that approach. But that requires you to act now and have privacy.
Obi, we got you back here in El Salvador.
I'm back.
It was, we were last together in Mauritius.
Yeah.
What was that, a month ago?
It was just over a month ago,
Yeah.
yes. Yeah.
Amazing, not just the African Bitcoin conference, but the summit that we were able to do there with the circular economies, and you were one of the featured speakers for that. So I'm excited to have you here this week for the summit here in El Zante.
If possible, I think I'm more excited than you. That event really blew my mind, and it was a real testament to what you guys have been working on. I mean, I loved I went to the B Trust event because I'm on the board of B Trust for at least for a few months more. And I then went to Africa Bitcoin conference, which was also amazing. But we had the opportunity to go to the Africa Bitcoin Circular Economies event. And I really, I don't want to say which one of is the darlings I like the most, but I found it, because it was so unexpected, I found it the most profound for me. And that's what made me say that I have to come to see what you're doing here at the Bitcoin Circular Economies event in El Salvador, where it all began.
No, we're excited to have you here and excited that you're going to be speaking. And I think, when we were in Mauritius, you could just tell how invaluable it was for the different circular economies to be able to ask you questions, but I think also for you to be able to share things that they needed to see and the tools that you're creating.
I think, I feel like one of the big insights for Fedi right from the beginning was that if we want to get to mass adoption, if we want to see Bitcoin achieve its final form, if you know your Dragon Ball Z history or legend, you need to not just build the software. You have to be on the ground, listening to actual users, being humble, and stay humble and listen to users, or stack knowledge as opposed to stack sats. And you only get that from being on the ground. And that was one of our big insights. I think that's what a lot of the people who invested in us and believed in us early in our current team and any future members really finds compelling. And I think you guys understand this as well. And so whenever you have an opportunity to be on the ground and listen directly from people who are actually passionate about what they're doing and giving you feedback, honest feedback, it's invaluable. A lot of people don't like to hear criticism. It's a natural instinct to shy away from it. But if you're an entrepreneur, you need to run towards criticism, because in that criticism, you get the learnings, and it's 1, 2, 10, 100 of those. And eventually you'll have a product that actually solves a real problem. And so when I was in this room, I mean, it was all great and we were talking about our product, but the best bit for me was the part where all of the circular economies had an opportunity to ask us, I got a problem with this, I've got a problem with that, how are you going to do this? I would have liked that bit to be like 2 hours by itself, just being grilled for 2 hours. It would have been amazing.
Yeah, it is. It's pretty eye-opening to see the difference between what engineers and coders think a wallet, or tool should have when, they're in a first world environment and something usually kind of sterile and everything works versus users that are often in places, where power is intermittent, internet's intermittent, they can't see the, certain things on their phone in the sunlight, the cameras, on their phones are too weak to actually, work right. And so I think it's, like you're saying, it's so crucial to have people on the ground.
I've got so many. So a lot of our team is from around the world. We're an international business by just from the start. So we have developers who've come from various parts of the world. But one funny story as an example of this was there was a Bitcoin Plus who do these conferences around the world. In fact, they're going to do one in Africa, their first one in Africa soon this year. But they had one on eCash. Was it last year or the year before? I can't remember which one. I think it was the year before. And they had all these prizes for different things. And one prize was someone was asked to make a mobile phone app which could use eCash, but could allow one eCash account across multiple phones. So if you had multiple phones, you could log into one with your eCash account and see your balance. And if you go to another one, you can log into one and see your account, which is easy to do with centralized systems. But with eCash, it's harder because the money is actually on the phone. So how do I make sure you can't double spend? Now, got an exceptional team, and one of the members of my team who's from India built in this hackathon the solution to this. It worked really well, demonstrated it, and they won. And lots of other people came up from around the world, mainly from the West, saying, that's so cool. We've been looking for this for ages, the ability to have your eCash on multiple phones. And he goes, so how are you going to use it? He goes, I'm not going to use this. I'm just doing it because I would win the prize. And he goes, and they were asking a bit more. He goes, look, from where I'm from, the problem is the other way around. You need multiple people on one phone, not one person with multiple phones. Yeah. So the point is, it's just such a different context. But if he's able to do it and he's going to win money, he'll do it. But it's just an answer that sometimes, Alex Gladstein talks about, so check your financial privilege, and it's a great book, great point. But I think there's two other things we have to be careful of. We have to check our technical acumen privilege. You just, without realizing it, even if you think that I'm going to reduce the complexity of this by 90%, that can still be way above many people's ability. And it's hard to really conceive that. And also to check your risk management privilege. If you've got, most people in the West, whether they realize it or not, have some level of safety net.
Yeah.
So it's hard to conceive of a life where if you make a mistake, you and your family massively suffer. It's not just you don't get to go out that week or so on, or you have to cut some of your expenses, or maybe sell a car or sell a house and go to renting. You literally may, not be able to survive, not you or members of your family may be able to survive. And so in that sort of environment, your ability to, your risk tolerance is lower. And so again, those are the three things I think are really, really hard for people in the West to understand, financially, technically, and from a risk. Just so much risk is managed for you if you live in the West. And so it's incredibly interesting for me.
So before we get into the details of Fedi, and I think a lot of viewers will be familiar with what eCash is, but a lot of them won't. So I'll have you give some definitions. But before that, I know you have been in the Bitcoin space long before you were thinking about this direction, and had, I believe you owned an exchange at one time. So
Yep.
Would love to get a little bit of your history, and then specifically your thoughts on self-custody, because that is something that we've wrestled with a lot within our project, because getting people to take self-custody, initially sometimes is a step too far and keeps people from even being willing to entertain using Bitcoin. But obviously longer term, we want people to have self-custody to be able to control their own coins. And so would love to hear what your thoughts are on that and how it's a lot more complicated than people think.
Oh, so there's two. So the history first, and
Sure.
then we go. So the history. So even going back before Bitcoin, I was a geek. So I studied computer science and cognitive science in university in London. So that was an old way of saying AI. So I was working on neural networks in university. This is back in the 90s, though. So we didn't have the processing power to make it do something useful. But it was incredibly interesting, and I could already see that there was something powerful there. But while I was in university, the dot-com era happened, and I very early on started working for a number of what went on to be quite successful dot-com companies, internet companies. And that continued for 15 years as CTO or chief application architect and all these technical roles until various things happened in my life that made me realize part of it. One of them was the passing of my older brother suddenly, and it made me realize that, you only live once and you need to do what you really are passionate about, which for me was entrepreneurship. So I ended my very lucrative CTO career and went on to my initially not very lucrative entrepreneur career and had to relearn everything, make a lot of mistakes. And, I always say you stumble your way to success. That's how you learn. And that happened for approaching 10 years until 2011. Well, actually, 2011, I first became aware of Bitcoin. A number of friends sort of told me about it within a month or two of each other, because it was like, this is right up Obi streets. It's sort of tech, and it's also got this sort of meritocracy element to it. He's always banging on about meritocracy, and he's a geek. He'd love this thing. And so I thought it was incredibly interesting. I was a little bit concerned, no, I was a lot concerned that it wouldn't have staying power with something this important and powerful would be just squashed by governments. I bought a little bit, forgot about it. 2 years later, nearing the end of a startup I'd been working on, a friend came and said, look, why don't we create a Bitcoin exchange? And this was in the UK. And I thought, okay, this Bitcoin stuff's still around a couple of years later, and Bitcoin was worth a lot more. So the Bitcoin I had was significantly more in value. And I thought, okay, it's not only an amazing idea, it's really cool technology. The philosophy behind it's really strong. It has staying power. Let's do this. And we had this crazy idea at the time, it may not seem so now, that let's just make a UK Bitcoin exchange that doesn't suck. That was it. And that was a very high bar at that time. Every exchange at that time, they were dropping like flies. They would have breaches of hacks all the time. And often they would do insider dealing or there'll be suspicions of that. And we just thought, well, we're technologists. Let's just build a reliable exchange
And this
that
was
doesn't
in
do anything
13?
special. This was 13.
Okay.
But
there were exchanges in the UK already at that time.
At that point in time, there weren't. There was one before it called Bitcoin, where the founders. There's these stories similar to what happened in the US, like BitInstant. It was a similar sort of thing where I think the CTO is you might know him. He's a guy called Amir Teki. He was very known in the space. He had this view that all code should be open and free, which makes sense. But without sort of discussing it with the rest of the team, he just decided to open source it, which is, you can take your view. But the problem was that when people looked through the code, they noticed that the actual private keys to the holdings were in the code, and all the money was stolen.
Oh, wow.
So you probably don't want to make your private keys public, even if you make your source code public. And the money was stolen. That was the end of Bitcoin. Within a few months of that, we started up CoinFloor. Other than that, at the time there was.
I'm sorry. What was the name of the company?
CoinFloor.
CoinFlow.
Floor, as in Bitcoin trading floor.
Okay.
So it's a trading floor for Bitcoin, CoinFloor. And other than us at that time, there was a few very small brokers There weren't any. They all started up after us because then we provided the liquidity. The only other major player, which you wouldn't call an exchange, was local Bitcoins. So when we started, local Bitcoins was the only major thing in the UK. Within 6 months, we were equaling them, and within a year or so, we became the top exchange in the UK, which we retained for like 5 years, 6. Coinbase came in, and they had a lot of US money and so on. We fought the good fight, but by the time I sold it, after about 10 years, I think we were second or third.
Okay.
We were sort of around the same volume as Kraken, and Coinbase was number 1. We were still a very profitable business, but we were slowly losing market share. More to the point, it became disheartening for me because, I mean, one, there was this whole, I had to go through the Bitcoin Cash wars. And again, we bucked the trend there. A lot of people wanted to support this alternative thought for Bitcoin. We decided to say, look, let's just let our users decide, and we'll support both, and the market forces will allow. And that was quite a big point at the time. Another key thing was we were the only exchange to state that we would do proof of reserves and do them. A number of the other exchanges at the time, they've deleted those records when they've stated it, but they all promised. Coinbase, blockchain.info, now blockchain.com, Bitstamp, Kraken, all promised in a joint letter that after Mt. Gox that they would do proof of reserves. We separately said we would do it and just did it for the entire 10 years. I think Kraken did 1 or 2, and then stopped. The others didn't even do 1.
And why do you think that was?
I'll leave you to make those conclusions on why I think that was. We didn't ever comment on other people's. Well, what we did say is we've heard comments that it was complicated to do, and he goes, well, we weren't as big as you and we managed it. And I think it was probably hard to argue it was complicated to do when a medium-sized exchange, I wouldn't say we're small, but we were a medium-sized exchange, was capable to do it without fail for nearly a decade. I think Nick Carter, when he was more popular in the Bitcoin community, pointed out that CoinFloor managed to keep it up without fail, and we kept the records and so on. And it's not perfect. It's not perfect. It has its flaws as a process. But what we realize, and it's sort of hard if you're not looking from the outside, is that it's very hard to maintain something like that. If you are actually insolvent, you could probably get away with 1 or 2, but for 1 year, 2 years, it will start to become clear that something's weird. You'll see flows of money coming in just before and leave just afterwards, and so even though it's small, a lot of the professional traders and so on liked to use us. Also because we weren't traders, we were technologists, so we just didn't know how to think in these sort of underhanded I'm going to try and get we just wanted to make sure our system was reliable and safe, and we thought that will be good enough. And then the third thing we did was, in terms of bucking the trend, was resisting the urge to become a multi-crypto exchange. There was this huge swathe of ICOs and so on. We had people literally throwing money at us.
I remember at that time, just for any of the shitcoins to get listed somewhere, their value would go up tenfold just if one exchange listed them. So they were just bribing
money,
everybody, just to
bribing everyone, and we resisted. There were people offering us, a lot of money.
I'm sure there was a lot of money at stake.
We did well as a company. I'm very thankful for the opportunity and the learnings. Not so thankful for the loss of my hair from all the stress, but I'm thankful for the learnings and the experience and the contacts. But I would say we would have made somewhere between 20 and 100 times as much money if we accepted that.
Yeah.
And I'm very happy that we didn't. But that gives you an idea of the level of pressure to accept these. So I understand why people did accept those as well. But by not accepting it, part of it was going to first principles, understanding what these different things are, remembering why we were doing this, which was to provide a service to our customers to increase the level of meritocracy in the world and just make the world a better place. And so we decided to have, in the end, because there was a lot of pressure from investors to, why don't we accept all this stuff? So we had to come up with two things.
Were you guys a public company?
We weren't public, but there was one point we were going to list and be
Okay.
public, but we weren't public. But still, we had a lot of pressure from
Yeah.
investors. And it was actually very interesting. One reason they were trying to pressure us to do this. So at one point they asked us, okay, look, there are all these different markets and you're focusing on this Bitcoin one and not these others. Can you go off and do this deep dive analysis now with ChatGPT and deep research and so on and AI? You could probably do this in 10 minutes, but this took a long time. Research all the different potential business models that people were talking about, blockchain at that time and real world assets. They all were discussed then. And store of value and all these other use cases. And can you work out the size of each one of those markets? And so, because we don't know how much you're leaving on the table, and he goes, okay, we'll do this. And they thought it was going to say, this is worth $1 billion, and this is worth $1 billion, and so on. This potential markets, obviously, you might only get a tiny percentage, but how big all these markets were. And actually, it backfired, because what we realized is that all these are sort of great, 1 billion, 5 billion, 10 billion. But the store of value market, the one that Bitcoin is preeminent in, is like trillions of dollars. And so if you show it on a diagram, it's like the use cases that Bitcoin solves, which is medium exchange and store of value, everything else is a rounding error to that. And so it actually strengthened our argument that yes, there's a lot of noise here and it seems interesting, but if you focus is a key part of success in business, and if you focus on this and Bitcoin succeeds, this was very early on when people weren't sure, then it's going to be worth to the world far more than everything else. So that quieted enough for a few years. And then it came back again, there was more pressure. And then they said, okay, we noticed that Coinbase has got these criteria, a list of criteria for whether they list the token or not. Can you come up with an objective list of criteria? So we did again. And we came up with a list of criteria, and it has to be technically reliable enough. It has to be a money, because all these things are cryptocurrencies. So if it's not trying to be a money, and so on, it needs to be decentralized enough, and so on. And then we came up with these 4 criteria, and we went through. And after about 20 or 30, we stopped because only Bitcoin fit the criteria. And then the question was, well, what's the criteria that Coinbase has to be able to list all these tokens? And it turns out that they say they have a criteria, but they never publish their criteria. Because there's no objective criteria you can have that ends up with anything that would not be unreasonable.
Yeah.
If you said it publicly, it'll either look unreasonable or it's only Bitcoin. And the only one that came close was for a short period of time. At the time of the fork was Bitcoin Cash, but then after a year, when Bitcoin Cash was worth like 1/100th of Bitcoin, it clearly doesn't retain its value as money.
Yeah.
So it failed on the moneyness test. Just being purely objective, not emotional about it. And Ethereum was the other one. But then Vitalik came out, which was great for us, and basically said that Ethereum was never going to make it as a protocol, and they had to replace it with Ethereum 2. Now it's just called Ethereum, but our current Ethereum was actually originally called Ethereum 2. And so our argument is, well, if the creators of Ethereum say that the current Ethereum is not good enough, then objectively it's technically not good enough, so we don't need to list it. And then Ethereum 2, and said if Ethereum 2 comes out and then it runs for a while and it's reliable, we'll review it. But that gave us again another few years of grace. And by the time Ethereum was starting to finally launch, it didn't take a year, which was the original idea. It took about 4 years. We'd sold the company anyway, okay. So we didn't have to do it. So we were able to stay Bitcoin only. But it was a lot of pressure. If I would not be a lot of people sometimes talk about exchanges and say, "Oh, you guys, you're shitcoiners, you just listed," but it's really hard to understand the pressure that those people were under. I mean, some of them, they might be morally, they were comfortable
Yeah.
with it and they just went for the money. But even if I know there were some exchanges who wanted to resist, but in the end, there was risks of hostile takeover or being ousted, and they just made these calls. I mean, we had those same challenges in CoinFloor. There was a ton of drama happening behind the scenes.
And what about the regulatory environment during that time? Was it kind of just a gray area, or was it like, were you worried you're gonna, the police were gonna show up and throw you in jail for what was that sense?
So it was very interesting. At the beginning, it was actually not a gray area. It was very clear that what we were doing was outside of regulation, and the regulators weren't interested. We'd actually, before we launched, we thought, young company, let's go to talk to the regulators, tell them exactly what we're doing, and we wanted to be regulated because we thought regulation was a good idea. I've since learned, but that's the naive view, and a lot of people when they start think that. And so we did, and we applied to get some sort of money transmitter license and so on from the FSA. Now it's the FCA. But at a time when we first applied, it was the FSA. And they reviewed our documents, which were probably like very basic compared to what they're normally used to. And they came back and said, look, in our view, we understand what you're doing. Thank you for the application, but we believe that Bitcoin is not money and therefore is outside of the scope of our regulation. You can do what you want to do, but it's not relevant to us. I guess the subtext is similar to selling bananas. It's not relevant to us. Although bananas then would be the Food and Drug Agency, but you know what I mean.
Yeah.
Something like, I don't know.
Baseball cards or something.
Something random like that. And they even said, and you can rely on this document in any future dealings with the FSA. So done. So we launched, and we were able to, and the experience of using Bitcoin at that time and prior to that time was really interesting. Buying Bitcoin and selling was very difficult because it basically meant peer-to-peer. You had to meet people in person. It was so that the friction to buy and sell and the liquidity to get in and out was difficult. But the use of it was really easy. You just go, and I would hold some, but I'd also spend some. And it was the medium of exchange. It was used a lot like money then. And I didn't have to worry about KYC or AML or any of that. It was just, it was very simple in terms of usage. It's just that it was difficult to buy Bitcoin and to sell.
And what about your guys' experience with the banks? Was that a challenge to
well,
help?
that's a very different that's a very different situation. So the banks, once there was this period where people starting to understand Bitcoin more. So when you set up and you say you're a technology company, you're using Bitcoin, they're like, fine, stamp technology, here's an account. And then over the years, this was the period of lots of FUD. Bitcoin is dying, Bitcoin's bad, Bitcoin's all of this misinformation. And so invariably what would happen is you'll have a bank account, you're doing nothing wrong, you're following all of the laws, the regulatory guidance, and then of course, this is me imagining because I can't know what happens, but I can, and sometimes I can know because you have an account manager and they will tell you because they like you as a customer, you're generating them revenue and you're giving them no problems, and you're following the law. But one day or another, someone senior on the board or something would have read something in some newspaper, probably the Financial Times, which was for years giving a lot of misinformation about Bitcoin. And they'll wake up and they say, we don't want any Bitcoin clients. And then you'd be told that you've got 2 weeks notice. And you can, if you're running an exchange where people are sending you deposits and withdrawals, the amount of chaos it causes to have to change your bank.
Oh, yeah.
You have to contact your 500 customers, then you're 10,000 customers, then you're 100,000 customers. And in 2 weeks, and if they deposit to the wrong address, it gets locked up and it does eventually get returned, but that could take a week to get returned, 2 weeks. And if the price is moving, it's disastrous. And we had to, over a period of, it probably wasn't until 5 years that we had stable-ish banking experiences. The first 5 years, I approached and applied to well over 200 banks, maybe 300. We had at one point an entire team that was constantly just opening banks accounts. So when people say, oh, it's difficult to get a bank now, I'm like, this is super simple compared to then. We literally had a department opening bank accounts, and we made sure we did everything absolutely right. We were always the best performing, the best, most, if they asked for information, we would give it to them immediately. And still, some days, people are literally sometimes, especially account managers, have to hit targets, who are just so upset that they had to let go of us as a customer because they're like the perfect customer. Generate them revenue, never give them problems, never complain. We never want to actually complain about anything. Even if the service is terrible, we never complain. We probably had actual accounts that were approved, and we onboarded maybe a dozen and a half over that period. And then we learned, and now for current banking, I just have a PTSD about that. So we always have 4 or 5 bank accounts in multiple jurisdictions, spread the money
Make sure
across
you
them.
can't be shut down.
Also, never
once.
keep more than a certain amount in each account because banks,
They just
by the
freeze
way,
it.
the banks themselves go bankrupt.
Yeah.
So they have I mean, especially if you've grown up with, for me, a child of 2 worlds, of Nigeria and UK. Growing up, it was very common occurrence for a Nigerian bank to go bankrupt. And that means it's just gone. And then the money is locked and you may never get it back, or a tiny fraction of it. So partly because of familial experience, and also seeing what happened a few years ago in the US, where we were a few days away from multiple banks going bankrupt as well. We don't keep more than a certain amount in any bank. I always worry when I have fiat versus when I have Bitcoin.
Yeah.
But sometimes you need it but I really feel I've switched so much that I feel very scared to have any fiat. I just have it the minimum amount that I need to just do working capital.
It's so amazing how much more sovereign you feel holding Bitcoin. Like there's nothing anybody can do to stop you from using it, to sending it for somebody. You don't have to get anybody's permission.
I like to say, I know you're asking the questions, but when did that switch happen from when you were like, you were scared to have fiat versus scared to have Bitcoin?
I think in El Salvador, it just made sense from the get-go, because the banks are so bad here and so horrible that you felt scared to have money in them for any time at all. And then, because oftentimes they would reject, you couldn't even get the money in, then you get it in and they won't like actually allow you to use it. It's the crazy rules. Like you open an account and then they won't let you deposit any money for 6 months. It's like, what?
That's the thing. When you feel, if you don't experience the pain, then you may not realize that this is the experience for many people in the world. So the thing for me, growing up in UK, but traveling back to Nigeria all the time, often, I would see multi-month strikes by teachers. So you realize that reliable education that happens all the time is something that's happens in some parts of the world, but other parts of the world where disconnects in education are very common. I would see issues where, I mean, even more recently, you could go for hours or days without power because there were power cuts all the time, instability on the power supply. So again, once you see that and experience that again and again, you realize that actually there's many people in the world live or lived with inconsistent power. And another one is when you see bankruptcies or banking failures, and you realize that banking, there's a phrase, it's like just put it in the bank. It's like safe as houses, and it's just it's like money in the bank. These are statements to say that these things are absolutely reliable, and that's a very privileged viewpoint because many parts of the world, housing could be confiscated. You can have natural disasters just take away your housing. So housing isn't safe as houses, and banking banks can just disappear overnight. And I find that there's a big correlation between people who experience problems with banking and their readiness to understand the value of Bitcoin.
Well, I think that's why the global South, I think, is quicker to see
Yeah.
the value in it. In the U.S. and much of Europe, banking works more or less. You still, I think, a lot of people are a little naive to how vulnerable they could be if the government decides to target them, or if the bank decides that they no longer want them as a customer. But most people haven't experienced that, and so
Yeah, and I think some will
yeah.
over the following years. And when it does, it's going to be, in a way, it's going to be far more dreadful, because if you've been there's a story of this village near the banks of a river. It's a fictional village, and every now and again there will be a flood, and all the properties, not very big properties that are by the banks, could get destroyed and flooded away. And so they decide to make a dam to control when there's floods, to prevent it from happening. So the dam happens and years go by, no flood. So people start building more houses along the river. Then they build skyscrapers and so on and so forth. And then this major event happens and it breaks the dam and the floods happen. But this time, instead of washing away 5 or 6 properties, you're washing away skyscrapers and so on. And when you take into account the total amount of damage, it's probably more than the damage caused by the people who constantly had to deal with this on a small basis, on an ongoing basis, because they were used to it.
Yeah.
and they built a resilient system to that, not to try and stop it from happening, but to just be able to repair quickly when it does. And so this system that seemed very stable is actually very fragile. And that's actually how in my view, is a lot of the West, that we build all these systems to sort of keep out the hordes. And it seems stable, but every system eventually breaks. And when you lean too much on this as a crutch and you build so much on top of it, when it breaks, the damage is going to be pretty appalling. So in a way, it doesn't seem that way, but the global South has more of a anti-fragility to these things happening because it happens so frequently.
So one thing that struck me from one of our earlier conversations was you talking about how hard it is to get people to take self-custody of their Bitcoin, that you experienced that when you were running the exchange, that you guys were prodding people to do that, but in general, people were just unwilling to go through those steps. So I'd love for you to kind of give a little bit of that background, and then how that has caused you to think about what type of self-custody or hybrid systems that we should use now for people to make sure that we're not relying just on people keeping money on the exchange, but also deal with the reality of how people like to interact with money.
Well, yeah, and there's so much to that question, but I would say that I was running the exchange, and at that time, on-chain fees were also quite low. And as is the Bitcoin way, it makes sense to self-custody. And so we, again, unlike most of exchanges, because they make money when people keep their money on an exchange, because then they can, especially with multiple cryptocurrencies, they can upsell, cross-sell, they can give you news and advice, which basically gives you FOMO, saying this is the next big thing, buy it, and then people will buy. And they go, oh no, it's failing now, and they'll sell, Oh, it's coming back again. You'll see this, and this is help, or education, but ultimately they're educating you to be constantly in a state of fear and FOMO. And we didn't do that. We had what we called the no BS Bitcoin education section to our site. You can guess what BS means, but we said the no BS Bitcoin education. And so, for example, it was very simple language. And for example, how do I trade on and should I trade? And other people will give you examples of how to trade and stops and limits. And our reply was, if you're asking me this question, the answer is probably no. You know, so that was like our answer to it, like the no BS answer to the question. So trading, we explained we had some of the most professional traders in the UK trading on our platform, and after multiple years of study, even the professional traders in the City of London, when we looked at the stats, the vast majority of them made a loss over just buying and dollar cost averaging. Professional traders. So if you're an amateur, you probably got no chance to beat that. But what we did suggest you should do then is buy regularly, or you can buy when you can afford it. That seems to not make so much of a difference. And then we, as an exchange, could be a risk. You should try and self-custody. But after years of trying and educating in person and online, we realized that very few people were self-custodying. And so we'll do spot interviews. We would meet up with people. This is UK, so at the pub, we'll organize events and check in with people. And after a while, you realize that this is just a massive challenge. And one person really made it hit home to me when I asked him, look, I've explained this again, you've explained me, I completely understand the need to self-custody. But Obi, the reality is that, and I get why it needs to be that way, but the reality is I trust you more than I trust myself. And that was like, it comes down to trust, it's risk.
Yeah.
It's not the
they're more afraid that they're going to do something to screw it up. They're going to do something screw up
than you. And if you look at the numbers, it's like the big risk is they could be, especially if they get above a certain age, they could be exploited, or below a certain age, they could be exploited. There's the technical effort, and we could get that down to zero. Let's just assume we can get that to zero. There's the cost. And again, in the West, paying $50 to $100 for a hardware wallet is not a big deal, but in many parts of the world, that's a big deal. But even if you can get the cost down to zero and you get the technical complexity to zero, the risk management. If you think about what people spend their money on in life, the vast majority of the things they spend their money on are things that reduce their effort, convenience, or reduce their risk, or both. That's what people want to export effort and export risk. So what you're asking them to do by self-custodying is to do the opposite of what they want to do, which is you want them to effectively increase their risk. Because now there is another risk. Holding it with a third party is a risk, but that's a potential risk that's very hard for someone to be able to estimate.
Yeah.
And then you've got this absolute risk of, am I someone who's really thoughtful and careful and so on? There are some people like that. And tends to be the people who are happy to self-custody. But if you look at your group of friends, well over half of them are probably not the sort of people who are sort of measure twice, cut once type people, or dot every I, cross every T type people. Most people are not like that. And so you're asking people who are not super careful and super considerate to become very careful and considerate. And then you're asking them to go against their nature, and that's the realization I had. And that's why I think fundamentally, unless people literally change their nature, most people are going to be uncomfortable with self-custodying. The only way to solve that is you're going to have to find ways to reduce the risk of self-custodying down to the point where it's as low risk as custodying with a third party. And so that was an insight. Is that a solvable problem? I don't know. I think the technological problems can be solved, and I think the cost problems, I think you can get the cost down to near zero at some point. And I think you can get the effort, the technical complexity down to near zero. But the perception of the risk, that feels like you're asking someone to change their personality. Or everybody become more careful, and that's like everybody become humorous, or everybody to become introverted, or everybody become extroverted. There's some people who will be extroverted for their whole life, or introverted, and then what do you do with those people who aren't comfortable with taking on that risk? You just leave them behind, and that was the thought for me. With that thought, I met my co-founder, now co-founder, Eric Syrian. This was in Prague, and he'd invented this thing called Fedimint. It was a chance encounter. And I was looking for a solution. And what I realized that Fedimint did was, having run an exchange, I realized, well, why should people trust us? What are we doing? And I think, well, what we do is we hold Bitcoin on their behalf. The people who are holding the Bitcoin are very trustworthy people within the organization. We keep their identities quite secret. Even within the organization, not everybody knows who they are.
Yeah.
They might know it's one of 20 people in the finance, technology, and operations department, but they don't know exactly who it is. And we hold it in a multi-sig, so their identities are secret, or at least kept anonymous amongst the anonymity set. We hold it in multi-sig, which up until today is the best way to hold large amounts of Bitcoin. Nothing better. Every exchange, if they're not using a multi-sig, you should run away because that means it's in a single sig with one person having the keys. And then they come together to sign transactions, and then they have a small amount in codes in a hot wallet, but the majority is held that way. But almost every exchange would have built their own systems in a proprietary way over a period of years, and they've got their own multi-sig set up, ideally geographically distributed with anonymous parties. What Fedimint is that thing in a box. It's effectively and on top of that, we give each user privacy. So it's two things, but fundamentally the actual structure of what we're holding is the same as what these exchanges are doing. In the same way, exchange, you can think about them as some sort of big supercomputer mainframe, and Fedimint, what my co-founder invented, was a way of miniaturizing that down to a microchip. But it's the same logic.
So before we dive deeper in that, maybe talk a little bit about eCash and give people the basics of that, and then we'll delve more into Fedimint and your guys' vision.
So what's interesting about Fedimint, and then I'll talk about eCash, is only one part of what Fedimint is. The other part is, to say, the way to custody things into the level of, potentially over time, the level of security that you get from the best in breed exchanges, but bringing the cost down to that approach to custody so that any community can have access to that. But on top of that, we add this, the first thing we implement with this is a way to hold Bitcoin privately so that any one of the users can have monetary privacy. And the way we did that is using a protocol called eCash. Now, eCash was the first digital currency protocol that was actually commercially used. Invented in the early 1980s. It's 25 years older than Bitcoin. Invented by a guy called David Chaumian. And it is a very simple set of cryptographic primitives. But what it allows you to do is you can be a mint. You can think about that as a form of custodian of others' money, and then you can issue tokens, but you can issue them in such a way where you don't know which tokens you've given to any given person, and those tokens act like tokens in a fairground or in an event. So once you've issued them, people can spend them and so on. You have no awareness of how they're spending them. If they want to, they can come back to you and they can ask you to switch some of those tokens for new tokens. Maybe these ones are damaged and they want to replace, or they can ask you to switch those tokens for cash. And you know that the only tokens that you will be redeeming are ones you've issued, so you're good. It does mean, though, while people are going off and spending your tokens, they have to trust you because you're sitting on the bank of the vault full of actual cash.
And the way this works in practice, just because of what we saw with all the ICOs and all that, the word token has like a very negative word, meaning for a lot of people. So I just want to clarify that this is not like some additional token. This is like a one-to-one exchange that you have for the amount of Bitcoin. You guys aren't issuing a token as far as like in a fundraising way.
Yeah.
And maybe you have a better way to explain that than how I just butchered it. But I think
I think you explained it correctly. And and some people will have a negative view no matter how you explain it. But the reality is we are issuing I mean, it still is a token, but it's a token backed one-to-one with the money behind. But the reality is you have to trust that the mint is backing it one-to-one with the money behind. So if you are given 1,000 Satoshis, you could issue 1,000 of these one Satoshi tokens and the people can spend those. This is a naive way. It will obviously split it up into different denominations, just like coins in your pocket. You'll have 1 Satoshis and 10 Satoshis and hundreds, but fundamentally the total will add up to this. And then when you spend it, or pass it around or transfer it, you or someone else can come back and say, can I have 50 Satoshis actual back into my Bitcoin wallet? And you give them 50 tokens. That's fine. And you as the user of these tokens gets incredible privacy, because once they're issued, the issuer, the mint, has no idea how you spend them.
I mean, it's in essence a coin join of sorts. That's just joining all of these.
No, it's not a coin join. It's not a coin join. No, it's because a coin join would be where multiple people who are doing transactions on a blockchain are trying to send their money to one place and then in one transaction send them out. Here it's much more similar to what would happen on an exchange, where people deposit to an exchange. But imagine you had an exchange where people deposit to an exchange, and when people wanted to withdraw, they can withdraw from the exchange, but the exchange keeps no records of who are the customers or so on. So it's actually, this is much more akin to allowing any community to have a facility similar to an exchange, but without the overhead of an exchange, and they can run it themselves. But the complexity of exchange is being simplified down to a protocol that handles it for them. So the idea is, if we can't get everybody to self-custody and they want someone to trust, can we change that trust from trusting a third-party stranger in Silicon Valley to trusting their community instead? So I wouldn't call an exchange a coin join either, because it's not. But fundamentally on chain, the relationship is being broken, but in a different way.
No, that makes sense.
Yeah.
So explain, like, on a practical level, what has to happen for somebody to set up one of these communities, and then what it looks like with the interaction of Lightning, if they want to pay a Lightning invoice or an on-chain invoice. How does that look like on a practical level?
So one of the things first is we separate the idea of communities versus federations. Federations are the ones that are holding or securing Bitcoin, and communities are places where people just come together to interact, to talk, etc. So if you want to set up a community, it takes 2 minutes. You just give the name of the community, description, and go. And that it's similar conceptually to a Facebook page or a WhatsApp group or a Telegram group. So there isn't a monetary element to the communities, but they are within the Fedi wallet.
Okay.
And so because they're within the Fedi wallet, even though they don't deal with money themselves, money is never far away. So you can be chatting with someone, and then one person in your community can send money to another person within your community. But when they do, that's happening peer-to-peer. So the eCash is sent peer-to-peer. It's not the involvement of the community. So you can set one of those up. Think about that. If you're putting it in physical terms, it's like the town square. In the town square, people come, they chat around the watering hole, they have conversations, or on the beach. And near where people have conversations are lots of shops. We call those mini apps, where people can, and each community can say, here are a list of mini apps that I think are useful for people in my community. Here are some announcement groups where people can discuss and chat. And each person can also have their own private conversations. That's the community. And then separately, we have federations, which is where you think about those are like mini wallet services where you can set up a wallet. And you could be a member of multiple federations, just like people in the real world could be a member of multiple banks or so on. Here, you can be a member of multiple federations, and each one you can have some eCash with. And those, again, you can set them up in multiple ways. You can go off and download the source code yourself, compile it yourself, and set it up. Or you can use services that we have with things like Start9, Umbrel, Nodana, where you can create your own federation, your own Fedimint service. If you've got the Start9 service installed already, or Umbrel or Nodana, in literally 30 seconds to a minute, and then there's a nice WYSIWYG UI interface. And then also we ourselves created something called the OG setup service, which is basically the same thing. It can help you set up a federation, but it's like a bot which walks you through it. So you just talk to it in chat, and at the end of a 1 minute conversation of question answers, it goes off and it will help you create a federation where you're one of the guardians. It will launch a service for you in the cloud, and then it will contact one of a number of anonymous other guardians, OGs, we call them, other guardians, and then in combination, it will create a federation for you. So that one can literally take, again, 2 minutes to do, as long as you're willing to pay the cost of your server and so on, and also the cost to the other OGs to be able to run for you. You can be up and running in 2 minutes. So anywhere from, if you're technical, a couple of hours and you do it all yourself, to 2 minutes, ignoring the time to sort of add Bitcoin to your Lightning channels and so on, if you use the simple service.
And that's if you want to actually create a federation.
Yes, but you could,
you could just join one.
Yeah, there's a number of, I think at last count, public federations. So those are ones where people have chosen to make it public. Now, obviously, there's a significantly larger number of ones that are private, where people want to keep it to their own group. But public federations, I think we're approaching 30 or 40 public federations. And when you download the app, you can click and it takes, I don't know, 20 seconds. You just, once you're downloaded, you say, get a wallet. You can get a wallet immediately, or you can say skip, and then you're in.
And is, just quick question, is that open to anywhere in the world? Are there restricted countries?
It's open to anywhere in the world. The App Store limits us from a couple of countries at this moment in time, but if they ask, we have to pause in those countries.
Is it available to U.S. citizens?
It's available anywhere in the world, except for the countries because we're just providing the software.
Yeah.
And you download the software. If you download it and you don't join a federation, then it's basically a chat app, for example. If you join a community, then that's no difference to using Telegram.
Yeah.
And then the federations it's up to the people to decide where they want, and they have to look at the regulations in their own country and make their own determination. Because each one, we're basically allowing anyone to run something like an exchange, but without all the complexity. And so if you, you
guys don't control it, so it's their call on those things.
Yeah, and so there are 30 or 40 of them, and we expect that number to increase, public ones, and then there are significantly more private ones, and we expect that number to increase significantly over the coming years.
So what are the real risks if you were to join one of these public federations of the guardians being able to either do a rug pull or to screw something up that would cause you to lose your funds?
So I think that those are the risks that people cite. I actually think there are way bigger risks in any custodial system, which is where you say the one is rug pulling. A lot of people, especially in the West, focus on rug pulling. We have never seen an example of that. The more common risk is human error, people making a mistake, screwing stuff up, forgetting their keys. If you think about it on an exchange, we ran an exchange for, say, a long period of time. And I can count on two hands the number of times customers were exploited. Maybe not, maybe about 20 examples, hundreds of thousands of customers being exploited seriously. Many attempts to exploit, but even then, compared to the number of people who forgot their password, it's like 1/100th of the number, 1,000th of the number. Forgetting your password, machine breaking is a way, way bigger risk. So it's always very interesting to me that people focus on the rug pull when the bigger risk is the risk of failure or mistake, the honest mistake. And so if you were to have a single server mint, which you can do with Fedimint, just a single server, the big risk I would worry about is that person makes a mistake and everybody in your community has lost their money, or their machines explode or damage and so on. So in which case you now need to put a lot of effort to make sure that infrastructure is redundant and reliable, which means that you effectively created a redundant system anyway, but with just, so it's still, you've federated your setup, but with one single guardian as opposed to with 4 guardians. But at least that deals with the thing, if one database fails, you don't want to lose your entire thing. So that's the first thing that Fedimint protects you from. The second is because they're separate people, now no single actor, no single person can take the money. It requires collusion. And just statistically, the larger the federation, the harder it is to collude. It never goes to zero. But at some point, with Bitcoin, you require 51% to collude of many tens of thousands. But still, in theory, what happens if the majority of people rug pull? It's just that the risk never goes to zero. So right now, many of the federations are 4 guardian federations that would require 3 to collude or to steal. But I think we're going to be seeing over the coming year, as we've made it easier and easier, that people are going to start making 7 guardian, 10 guardian or more federations. And when you're getting to 10, 13, 16, at that point, you're getting to the same size of the liquid network. So it gets harder and harder. And that's each federation. And then we'd want many, many dozens of those. So if you're starting to say, well, I've got 10 federations I'm a member of, and each one of them is the same size or similar to the liquid network, and I'm only storing small amounts of money across all of them, then you've federated it and decentralized it. It starts becoming lower risk. On top of, and there's one more thing. Yeah. There's what we found is that a lot of the guardians want to be private, and the biggest reason is especially this increasing number of wrench attacks. Yeah. So if I'm custodying my own money, I'm at risk of a wrench attack, but if I'm custodying others, it's an increased risk. So the fact that they're private and they're, in a weird sort of way, the more these attacks happen, the more people want to be private. But it's very hard to collude and be private. So actually, the more it actually, in a weird sort of way, has the same anti-fragile properties of Bitcoin and its 51% attack process, that the more you try to attack it, the more lucrative it becomes, so the less you want to try and attack it. Here, the more people try to attack privacy or people's holding of custody, the more you want to be private as a guardian, and the more you want to be private as a guardian, the more disinclined you are to collude, because that requires you to breaking your privacy, signaling someone that you have the ability to move funds, which could put you at physical risk. So it's possible to set up a federation with, especially with the OG setup service. It's possible to, and we're working on more of that over time. It's possible to set up a federation where you retain your privacy. And then unless you choose to break your privacy, which is the nature of privacy, it's your choice, no one need know who you are. And to collude requires you to break your privacy. So the incentives are aligned as well.
Is there a danger of, as you increase the number of guardians, that there becomes people that just become unresponsive, and then you don't have enough people to sign off on transactions? Or is there any risk there?
Well, I think that actually reduces the risk, because so what you want to do is you have to have some mechanism to identify guardians as being to some degree trustworthy. And I mean trustworthy in terms of able to run software reliably and are are committed to Bitcoin's values and mission, and to some degree unique from each other. And this is something that we're looking at and working on. But if you can identify those things, then it shouldn't matter who the people are, because they have an incentive to be responsive, because they have a profit incentive. If you're whenever a Bitcoin transaction will happen, the Lightning Network will earn money, but the Federation guardians will also earn a small fee as well.
Okay.
And so they have a reason to do something, and also to run a federation is very, very simple. The overhead is far less than running a Bitcoin node. A Fedimint server can run on a Raspberry Pi. We've actually shown it running on a old mobile phone. So if you've already got a box which is running a Bitcoin node, you could probably run a dozen, 2 dozen Fedimint services on that, and it wouldn't even notice it. So basically again, if you do nothing, for almost no marginal increase in your costs, you earn Bitcoin. And if you turn it off, you don't earn Bitcoin. But you don't save anything in terms of your fixed costs. And if you try to collude, you put yourself at risk. And so, and there's there are other incentives as well. But again, I'm not saying this gets the risk to zero, but it's very interesting how, especially because of the federated structure, the incentives align to lead people to the simple thing to do is to do nothing, increase your costs almost by zero, and earn revenue. And that's where people's incentives will lie.
So within this, whenever you're sending funds to somebody else that's within the federation, it's using the eCash mechanism.
Yeah.
And is that also if it's sending to another federation?
No, if you have Federation A here and Federation B here, within, let's say this is Las Vegas and this is Reno. And we know whatever happens in Vegas stays in Vegas, and whatever happens in Reno stays in Reno, as the famous sayings go. So that's eCash internally, fully private, eCash internally, fully private. But if you're sending between the two, you need some sort of road, the highway, and that could be Bitcoin on-chain directly, and that will always work. Doesn't matter about channel balance and so on, but it will potentially be more costly, especially in future if Bitcoin usage grows the way we expect. Or you can send over the Lightning Network, which is what we expect most people to do. And so if you do that, transfers inside will be the least expensive. Transfers between Lightning Network will likely be the least expensive and the quickest as well. And so for amounts below a certain amount, people use Lightning. Above a certain amount, they use Bitcoin. Lightning, I still think, is always the best because not only is it the quickest and it's more scalable in terms of being from price, but also with Lightning, you have sender privacy. So you don't have recipient privacy, but you have sender privacy. But that will mean as if I was in Reno and I sent value to Las Vegas, then if it was on chain, you know that someone in the entire city of Reno sent value to someone in the entire city of Las Vegas, which is very, very high level of privacy. It's not perfect privacy, but you're pretty good. If you send it over the Lightning Network, it would not only would it take seconds and will be you have final settlement, you also have sender privacy. So you don't actually even know it came from Reno. You just know someone on the Lightning Network sent value to someone in Las Vegas, which is even better. But if you send it within the federation, then you just know someone in Las Vegas sent value to someone in Las Vegas, and that's basically could be pretty much anyone. In all three cases, though, you're basically at nearly very, very high levels of privacy. And from a user experience point of view, you don't have to change anything about behavior. You don't have to send it to somewhere away. It's just It's just a very, very, very easy user experience. I always find, this last point was, when I first heard about Bitcoin, I think a lot of people did, they had this view that it's a coin and it's going to work like the coins in my pocket, and I've got like 15 different coins in my pocket and I want to pay for something. I find the ones that add up to the amount and I give you those and I keep the rest. And maybe if there's something left, I get some change. And then you spend the next 1 or 2 years finding out that Bitcoin doesn't actually work that way. It doesn't actually work like a coin, and there's this ledger, and there's all of these different rules and so on. When you see eCash, it actually operates like that. That's how it works. When I have money in my wallet, it's actually on my phone. My phone is actually a wallet, and there's different files, each file representing a coin. And when I want to send you money, I just take some of those coins and I transfer them to you. And because I'm doing that, I can even do things like, even if I have no internet. And that was one of the, I remember coming back here a few years ago, and I wanted to pay someone for pupusas. This was before I was keto. So pupusas on the streets. And I had no internet on my phone. And I couldn't pay them, even though I had the money on my phone. Or I had the money, not on my phone, on the blockchain.
But if they had a Fedi wallet, you would have been able to.
If they had a Fedi wallet, and I had a Fedi wallet at the time, it didn't exist at the time. I came 3 years ago. If they had a Fedi wallet and I had a Fedi wallet, I could have taken my eCash, and I can do it right now, and I could create an offline send where the eCash on my phone, it will say, well, how much you want to send? And you say, $1. And it will find notes that add up to $1, and it will create a QR code that contains all of the notes in the QR code. And if they scan it, they can receive the eCash through the screen, even though I have no internet. And I can get my papusa, they can get their money. And if they want to, they can instantly convert that in and transfer that out to Lightning, to their own wallet if they wanted to. And that for me is a big unlock. We use that a lot around the world. Many places where they have limited internet, they can still send and receive, not all day long for weeks on end, but for short, because we always highlight any coins that haven't yet been settled with the mint and replaced, because there's a risk of double spend. But still, it still allows me to know I've got money, I can give you the product.
Interesting. So I know you guys have been very focused on circular Bitcoin economies and supportive of them. You guys have done a lot of time on the ground, whether it was with Bitcoin Akasi, or I think you guys did some stuff with Bitcoin Lake in Guatemala.
All over. But not to the same level as you guys, but we're always looking at you guys as an inspiration, but we're trying.
So I'm just curious, would love to hear kind of some of the things that you've learned of, like, what, maybe you thought that something was needed, and you, after working in the community, you realize actually we need to do this something different, or maybe it was like, wow, we're onto something and this is exactly what they need. But curious as to why are you guys so focused on circular Bitcoin economies?
Circular Bitcoin economies, the way we describe it is people living in disempowered communities, and they're disempowered because of financial resources, or potentially living under the yoke of authoritarian regimes, and in desperate situations. We focus on those. But that has always been, if you want to have an insight into our original pitch deck, was market number one. We have market number two is far greater than that. That's every person anywhere in the world who's currently holding money on exchanges. And, as a way to, which was the original idea it came into for me when I was looking at it, how do I get people off exchanges? Is market number two, which is obviously far greater. And then, market number three, which is the one everybody wants to aim for, which is hyper-Bitcoinization, but that could be a while away. But why do we focus on this one first? Is because the way I describe it is, by working with the people who are in the most challenging environments, you're more likely to learn the most uncommon insights, and you're more likely to build a product which actually solves a problem for everybody. If I build a product that only works for hyper wealthy people in New York or in Miami, then it's great for that small market, but it's very unlikely to translate into being useful for people, the other sort of 8 billion people on the planet. But if I build a product that works for the most disempowered communities around the world, then it's easy to see how that can be useful for everybody. And that's why I look at an example as WhatsApp. That product works everywhere. You see it in all around the world, and it's probably the most used messaging app in the world.
Ironically, except for the U.S. It's funny because
Yeah, except for the US,
hardly any of my
funny.
friends in the U.S. use WhatsApp,
Funny,
but
yeah.
everywhere else in the world,
What do they use instead of WhatsApp then?
I mean, a lot of them just use iMessage, for, because they all have iPhones. So
iMessage.
yeah,
Well, that's sort of like super privileged
yeah.
iMessage. Yeah, I know iMessage. I almost never use iMessage. Just in the US, everybody uses iMessage. And I've tried to use it once. It's just a terrible, terrible program functionality-wise compared to WhatsApp. But everywhere else outside of that bubble uses WhatsApp, and it's an incredible product refined over multiple years, designed to work in the most extreme environment. And so that was the mindset that we had. Start there. The other reason why is because if you look at what's happening in the world with the world is heading into global economic crisis in many places. AI's advancement and the sort of massive societal change that's going to happen. We're going to have massive change. And so many of these people are living in the future, unfortunately, for other people in the West are going to have a future that's, we're going to see, there's this, the big dream was that the West and the global South, you'll see that they'll see this equalization and I think that's going to happen, but not in the way people expect. It's not that everybody in the global South is going to catch up to the West. I think everybody in the global South is going to increase, but the lifestyles of the West are
going to have to come down.
Are going to come down and deteriorate, and that's what we're actually seeing, and that's going to be very painful for one part of the world, and it's going to be very uplifting for the other part of the world. But as a result, building for this part of the world will help you build a product that's going to help everybody down the line. So that's how we started. That's why we started.
And has there been anything surprising to you as you guys have run these kind of trial, gone out into, whether it was Bitcoin Akasi or Bitcoin Lake? I think maybe you guys have done some stuff with Motive in Peru. Has there been anything that's been kind of like shocking to you, or is it?
Yes, too many to mention. I've got so many stories, but I mean, we came out with the view that we have to be on the ground, we have to learn, we have to be humble. No matter how humble you think you are or you're being, you're wrong. You have to be way more humble than and even then, I think we're constantly learning that we just don't know. And so yeah, it every day's learning. That being the case, maybe in the last 6 months or so, when we were hearing feedback from people, listening to what they wanted, we went 6 months without hearing anything new that caused us to throw everything away and start from the beginning. And that hopefully, fingers crossed, means that what we have, I mean, there's still years worth of development to go, but what we have is all the elements. So early on, we had the idea of adding chat. There was a lot of reticence to add it. It's like, we're just a wallet, why should we add chat? We added chat. It's now for us, it's a groundbreaker. It's key. I think that it will become clear in time that every wallet should combine chat and wallet. It's a such more intuitive way to send money. Once people understand that they can WhatsApp money, they can instant message money, they never do the other way again, because it's just so much more intuitive. So that was a big insight. It was a gut feeling to begin with. And I could see why a lot of people thought this doesn't make sense. We're a wallet. Why are we trying to do it? And it's a lot of
It
effort.
didn't make sense to me when I heard it,
Yeah,
and I was like,
yeah.
okay, you're going from being a wallet to, to adding all
But you should
this
see the people
complexity
using it.
and
I know it's not
Well, I'm
easy.
usually wrong about things, so I don't.
No, but I mean so that was one big insight. We have mini apps again. That is huge as well. But again, a lot of people think, so why do you need that? You've got a web browser, you don't need it. But again, that is a really, really big thing. We're going to keep doubling down on that. I think one of the biggest overall insights on why those things seem to not make sense, but they do, is because ultimately you want people to be, you want to train people on how to use a system. And one of the things, actually, we saw this in LATAM a lot, and it's being extensively used to train people all across LATAM, working with various agencies there. And what they came back with is the fact that there's one app where they can do everything. Even though if you think about what Fedi does, yes, there's a lot of complicated stuff and you can see the code, but ultimately the complication is around gluing things together. The actual things weren't built by Fedi. The chat is from Matrix, which is being used by the German military and has been around for over a decade. The money is handled by Fedimint, Lightning, and on-chain Bitcoin, which are protocols that are outside of Fedi as well. A lot of people confuse Fedi with Fedimint, but Fedi is the integrates everything together. Yeah. The mini apps are effectively a web browser built in, plus similar functionality Albi, but built in. And we're aware of Nostr, we're aware of WebLN and all these standards, but we don't. These are open standards that we're not adding to the body of standards. But something magic happens when you bring it all together in one, especially from training, because now I can train someone on one app, even if there is another service outside like Tando or PlebQR or Minmo or Money Badger or whatever. What you find is when you're training people, they want you to somehow make that a mini app within here, because conceptually for the user, it's just easier to understand one app that does it all versus multiple. And that's the big insight. I didn't even think that. I just thought, and the only way to replicate that is making another app where it's all in one. People want integration. They don't want to have 5 apps on there. People say, oh, you can just download this app and download that app. That's a very technically privileged mindset. Yeah. Most people don't have many apps on their phone, and they don't want to have another 6. I would use this one to buy, this one to sell, this one to hold, and then I have to transfer between the two. So, but on the other hand, if you try to integrate that tightly and do it all yourself, you'll need to be a company of like 1,000 employees. And what the reason why Fedi was only possible now is because the Lightning Network glues everything together, because we've got these standards that are widely used, like Nostr login and WebLN and LNURL, made by Andre from ZBD and so on. And they're widely used by so many people. So now the entire space of Bitcoin apps can become mini apps. And a user doesn't, in fact, what happens is when a user uses one of our apps, it's not our apps, it's a app, Bitrefill or Tando or whatever. They don't even realize it's a different app, even though it is. It says Tando and they use Tando. Yeah. We realize it, you would realize it, but the average user thinks it's all part of one. So if there's a problem, they then start complaining to us saying your app's not working. And then we have to work out, is it us or is it Bitrefill or Tando? And if it's Tando, early on, a few people would say, oh, no, that's not us, it's Tando. I go, no, never say that. We will say, we apologize, and then we will work with Tando to fix the bug. But then the end result is, when that's fixed for all of Tando's users, not just so we're effectively business development and UX research for the entire Bitcoin ecosystem. And so whenever we onboard a community, all of they need someone to run their federations. So that Start9 or Umbrella or someone gets business. They need Lightning connectivity. We provide that, but in future Breeze and Voltage will get business. Then they need to use mini apps because they're going to need to onboard and offboard. And so all of these, whichever is the relevant ones that work in their region, get business. So, and if you look at the average Bitcoin company, it's 90% tech people and 10% business development, or 100% tech people. And with us, by the end of this year, we'll be over 100 employees, and almost all of those will be on the ground or UX or marketing. So we're there to onboard so we're there to help other people onboard to Bitcoin. Fedi is just the gateway to Bitcoin.
Love it. Well, I don't want to hold you much more. Maybe you can still get the sunset here tonight. But is there anything that we didn't touch on that you feel like
we covered a lot? The only thing I would like to say, and I'm going to be talking about it a lot more this year, is, and for every community, is around privacy. And I mentioned it before, but it's just really important for us to understand that privacy is a superpower. We're heading into a time where we're going to be not so proudly putting the word Bitcoin on our T-shirts or the number plates of our cars and so on, because as I said, we're heading into dark economic times worldwide, and in those times, people are going to get desperate. And so it's really important now to start thinking about your privacy. Some people who have made the choice that we want to educate and we have to be public and we have to take that risk.
Yeah.
But for the average person, if that's not you, then realize that there are two ways to get security. One is through power, political power, economic power. You could be Jet Li and Jackie Chan and martial power or whatever, security guards and so on, but it's some sort of power, or through privacy. And I think about someone like Satoshi Nakamoto. He has no army, no office, no visible power, but and he has 1 million Bitcoin, so that's $100 billion. So he has the money to buy power, but if he or she is still around with us, they've chosen privacy as their mechanism to give them security. And if of the two, having to be on the run, or not be on the run, but look over my shoulder because I might be attacked or range attacked for the rest of my life, or just be completely private so I can walk along the beach in El Salvador free as a bird, I would suggest for most people to choose that approach. But that requires you to act now and have privacy. And yes, you've done a great job by getting into Bitcoin, but think about yourself, think about your family, often involved in range attacks as well, and focus on your privacy. If you choose to give up your privacy to educate, fine, but also do it understanding the risks.
Yeah. And I think there are, I know some folks in the space have done things to mitigate by actually making it so that they don't have access to their Bitcoin unless they have to get on a plane and fly somewhere else, and they kind of publicly put that out there to hopefully stave off somebody attacking them.
And that's risk reduction.
Yeah.
But the best is to just be private. Full
100%.
stop. But yes, if you choose to be public because you feel that you have, evil wins when brave men fail to do anything. So if you choose to do it, but please do it knowingly, understanding that the risks are there and they're going to increase. But for friends and family of yours, you should caution them and advise them to be private about their ownership of this. They wouldn't walk around with gold bars around their neck or so. And so why walk around with a car that says Bitcoin on it? It's just doesn't serve you unless you're doing it knowingly and you're understanding the risk you're taking.
Yeah. No, I think that's I think that's wise advice. One thing that's a little ironic and that's helped a little bit here in El Salvador, and maybe that'll change in the future, is because Bitcoin started in the kind of the poorest communities, that to most people it doesn't represent, like generational wealth. It represents like the money of the poor.
that's amazing,
And so,
yeah.
so I think there's a little less risk here. But as obviously as the price of Bitcoin goes up in fiat terms, that will change. So
Well, hopefully not. I love that. It's a good thing
Yeah.
to consider.
How can people find out more about Fedi? Where can they follow you? Like, what would you advise people that are kind of curious now and want to play around with the wallet?
So all of the above. You can find Fedi at Fedi, spelled like that, Fedi.xyz, and you can check out and you can find out all the ways to download the app and so on. The app is available in all the app stores, and there's multiple other ways to download it, even if you can't download it from an app store. For me personally, I have Twitter. I do the occasional tweet, or you can check out the Fedi Twitter. My Twitter is just Obi, because I was in Twitter very early. And yeah, to download it from the store, check it out. It's very easy to set up and run, and it's getting better every day. You don't need to have a community to join at the beginning. Everybody joins the Fedi global community day one. You don't need to have a federation to start. There are a number of public federations that are out there, and just get started. But it's the private Bitcoin wallet. If you use it, you're going to have private communications, private chat, private payments without having to think about it, and it only is going to get better.
Awesome. Well, I think that's a great way to sum it up, and I'm looking forward to hear what you're going to share at the summit here in a few days.
So am I.
Thanks, Obi.
Thanks very much, Mitty.